What is up guys, this is Deepak Bangar from Profitable Traders, and in this video we are going to discuss a very important financial concept called as inflation. What is inflation? What are the causes of and effects of inflation? Then what is the current inflation rate as declared by government, and sometimes why it can be very misleading. We are also going to discuss why it is crucial in my view to understand this concept of inflation when it comes to succeeding in investing and growing your money. But before we get started, if you are new on this channel and haven't subscribed to our channel, subscribe to our channel and hit the bell icon so that you get notified on priority whenever I upload the useful videos about how to become a successful trader or investor in the stock market and related to the personal finance as well. So thanks a lot, and let's begin. Let's first understand what is inflation. Inflation is nothing but the gradual reduction in the purchasing power of your money. What it means is things become expensive as the time passes by. This is nothing but the inflation. For example, a particular thing that is costing you 100 rupees today, after 1 year this may not cost you 100 rupees. Let's say it is costing around 120 rupees. So that means there is a 20% inflation, because of which this 100 rupees of yours are not able to buy that particular thing after 1 year, because the price of that particular thing has become 120 rupees, which was 100 rupees 1 year before. So this is nothing but the inflation. Now let's discuss about what are the causes of inflation, why there is inflation in the economy. So based on the causes, the inflation is classified or divided into three main types. The first type is the demand pull inflation. What this means is, for a particular product or the service, when there is an increased demand from the buyers, then what happens is the price, because of the increased demand, the price of that particular commodity, goods or the services, it starts increasing, and that leads to the inflation. This is nothing but the demand pull inflation. This type of inflation is driven by the increased demand of a particular good. Second type is the cost push inflation. As the time passes by, there is an increase in the cost of the raw materials or the labors which are required for producing a good or providing the service, and this results in the increase in the prices of goods and services. This is called as a cost push inflation. And the third type is called as built-in inflation. What it means is the manufacturers or the producers or the service providers, what they do is they anticipate in advance about the expected increase in the price of particular raw material or the labor charges in advance, and they factor that into the cost of the product or the services that they are offering in advance. That is nothing but a built-in inflation. So these are the three causes and three types of inflation. Now let's talk about what are the effects of inflation on different sectors of the economy. Let's first talk about the consumers. Inflation for a consumer is a bad thing, because a consumer will have to pay more for the same quantity of goods or the services that he was able to buy before with the less amount of money. Let's analyze the effects of inflation on the producers or manufacturers or the service providers of a particular goods or the services. Now, as the inflation leads to the rise in the prices of the products or the services, actually this is beneficial in a way to the producers or the manufacturers, because it leads to the increase in the prices of those products or the services, and this ultimately results in the bigger profits for the manufacturers or the producers. So the third thing is let's talk about the government. What are the effects on the government? So whenever there is an increase in the inflation, what happens is, since there is an increase in the cost of the goods and services, ultimately it leads to the more taxes for the government because of the two things. First is the companies, when they make more profits because of this inflationary prices, ultimately they have to pay more corporate tax to the government. So that's one thing. And another thing is, when there is increase in the wages of employees what happens is the payroll tax of the government, it increases when there is a rise in the inflation. So this is how the government and the producers of the manufacturers, they actually get the benefits from the inflation, and the consumers ultimately they are at the loss because the buying power of their money has reduced. Now let's talk about what is the current rate of inflation. As declared by government, the current inflation rate, the general inflation rate, is 6.95%, which means that the purchasing power of money is reducing by approximately 6.95% every year, and they are expecting it to increase it further, this rate. Now what most of the people do the mistake of understanding this inflation rate, that I would like to highlight. This is the inflation rate quoted by government on the basis of the average inflation, which is across different geographies or different states, then different sectors of the economy, different commodities. So when all of these things are averaged down, overall the global inflation rate is calculated, and that is projected as this figure of inflation, which is nothing but the 6.9% at the moment. Now does it mean that the average inflation which is there for the commodities or the things that we use for our daily life essentials, are the same? I would like to ask you a question. Let's take an example of food. So analyze how much the food prices have gone up in the last 1 year. Analyze how much percentage the fuel prices, the petrol or the diesel prices, have gone up in the last 1 year. And all these daily essential needs which are there, which normally we use as a consumer, what is the inflation rate in those commodities or the services? For example, healthcare, food, housing, fuel, etc., etc. Is it 6 to 7%? I'm sure it would be more than 10%. So it approximately 10 to 12% is the average inflation rate of all these commodities which are actually the essential for living a life. So don't get misled by this general inflation rate of 6 to 7%. Now let's talk about important concept of why you should know in detail about this inflation. The first reason is inflation gives a false sense of wealth to many people. In absolute terms, you tend to make more money because of the increase in the wages or increase in the profits when it comes to the business people, but actually the value of that money has actually gone down. Second thing, the value of your money is actually decreasing if you are not able to put your money to grow at the rate of at least the rate of inflation. So let's say the general rate of inflation is 7%. So if you are not able to put your money to grow or increase at least by 7%, you are actually losing money by just keeping the money as it is. And third thing is, if at all you want to create wealth, then it is important to know how to beat the inflation. What are the different investment avenues which can beat the inflation by at least 7%, and in my view at least 10 to 12%. What are the different investment avenues that we have for achieving or for beating the inflation? In the next video, we are going to discuss about how to beat the inflation, how to invest our money in particular asset classes which have proven in the last 10-20 years to beat inflation consistently. So I'm going to share those investment assets with you. So I hope you found this information useful. Subscribe to our channel, like this video if you like what I shared, and do not forget to hit the bell icon so that you get notified whenever I upload the next video about investment assets, investment avenues for beating the inflation. Thanks a lot, and I'll see you in the next video.